Mr. Shakti Agrawal, who is the head at Supply Chain Finance and School Loans, will now take on the stage and talk about innovative credit solutions for schools.
Through the course of the day, I think we have come across so many models of learning, experiential learning, cognitive, intuitive. We have algo-driven learning, we have codings, we have companies like HeyMath, we have Playablo trying to do things differently for students. But everything requires us to change the way we have the infrastructure. If you can see, when I was in school, this was something like my school building, a very plain building. You have the furniture, you have the chalk, you have the normal black board where, teachers write it some Shri Om or something to start the class, and then we used to learn. But now things have changed, and things have changed for good because parents want to know what students are learning in the classroom. They want to be more interactive. So now we have smart classes. We have solutions where companies have social media platform for parents, teachers. So we had PTA, Parent Teacher Association, where there was like tea, coffee, biscuits served at 5:30 in the evening. And parents used to come and shout and say that my student got hurt while playing on the ground. But now parents want to know each and every minute update as to what teachers are teaching in the classroom, whether it is effective or not. And I think it's a huge growth for the entire segment of education. And it's become more interactive. It has become more conscious the way teachers are teaching the students, right? And then you have fancy labs now which is set up, which provide students to experience how to build stuff, how to fail. And this wasn't that prevalent, not that far away. I think like 10, 15 years back, we didn't had that infra. And I think what really has enabled is huge technological advancement, right? So I think most of you who are here will go back and say that, okay, I want to do experiential learning for my students. I want to have real-time assessment. I want to have nice content which is more collaborative, which is more intuitive for the children. But everything requires one thing, and it stops at one basic necessity, which is finance, right? Whether it is to refurbish your classroom to smart classes, whether it is to sort of have your entire building set up, I don't think so. There has been a lot of innovation in the way lenders have approached education institutions, right? It is the same old archaic way of providing collateral. You have a land, you go to a bank, and the bank provides you a value on the collateral, and they get you loan, and then you sit on the loan for 10 years, 15 years, and no matter what advancement and technology advancement has happened in and around the school ecosystem, there is no way for you to raise more capital. Right? Now, we are trying to disrupt that. We are a 4-year-old young startup founded in 2013. We have already disrupted the SME space. We have already disrupted the consumer space. Now we are disrupting the lending space. And school loan, parents loan, fee loan are some few products which can really help the entire infra setup to sort of grow in an easy way. I think as I have mentioned earlier, the biggest challenge in the current process of documentation is generally the time taken, the interest cost, the pain, the collateral. I think the biggest thing is the collateral, right? How many students, how many parents and how many teachers and let's say trustees have already collateralized their property to raise some money for their existing infra? If by show of hand, see, I think most of us would not want to reveal that, but thanks for being the part of the audience, that people generally give their collateral and raise money, and that's the biggest problem in the segment. And we believe that collateral is not a barrier for technological advancement into school infra. So we don't believe that we should take collateral at all. We have entirely built up a digital process. We do quick disbursals. We do assessment in 4 days without any collateral given by the institution as such. Our journey, we have started around 2013. Our first loan came out in 2014. We have good funders on board. Global VC firm like Sequoia, Amazon has invested into us. We do consumer lending. And I'll tell you one of an example what we do with one of our partners. So everyone knows what Byju's is. You see Shah Rukh Khan ad, my student, my daughter or my son is learning great through the Byju's app. We fund Byju's app. It's a 30,000, 40,000 per year or for a couple of standards kit. And we fund that and make it affordable for the parent, right? At the end of the day, why should a parent miss out on an experiential learning just because they don't have an outflow of cash right now? And I think breaking that down into easy EMIs really makes the entire scheme affordable for the parent. And I think one of the few feedbacks we have received from parents is that now my son or the daughter can, literally learn and brush up the content. Personally, Byju's app really helped me or community around me to brush up the entire content very quickly. Because if the students have gone to tablets, and most of kids, nowadays use tablets to play games and Pokemon and Doraemon and whatnot. And if the content is going over there and it is a game-based learning app, why not? And I think this could be, and this is one of the biggest breakthrough which has happened, and we actually fund that app. So as I was mentioning, we believe in unsecured loans. We don't believe in any sort of collateral. We believe that the cash flow or the capability of the institution is far bigger. In my last 10 years of corporate experience, I have hardly heard of any school with a shut shop and run off with the money. These are good institutions. These are ethically driven institutions. These are institutions which are not in the business of making money. They are in the business of serving the society, right? So that's the reason why we don't see a lot of institutions shutting their shop. We feel that this is a segment where a collateralized debt is absolute barrier for them to have any technological advancement. And that's where we provide up to 50 lakhs first time borrowing. And this is the only product which we do in India. There isn't any other lender. You name it SBI, you name it HDFC, you name any other bank, NBFC, no one provides 50 lakhs of unsecured. We are registered with RBI and we have built good government processes so that our entire process takes 3 to 4 days. Now, once you have that money, what do you do, right? So the entire day has sort of, I'm sure, given you a lot of action plans for smart classes, upgrade the lab. You can have real-time monitoring mechanisms. You can equip your teachers with tablet, handheld devices to make real-time monitoring of your students. There could be tons of investments what you can do. You can refurbish your playground. At the end of the day, as an institution, that cash is up to you how you want to invest. And when decision makers and trustees and directors of the school try to think in that direction, that really motivates the entire ecosystem, because the student is at the end of the day getting a better infra, which was not there earlier. Sure. Interestingly, as I told you, we also do funding to the parents, right? So like with Byju's, we break down the entire cost into simple EMI. We have seen, and very honestly, you guys can definitely give me your feedback, that a lot of parents find paying fees not very affordable. They feel that, at the lump sum payout at the start of the year or at the middle of the year is a big burden on their overall salaried income. We basically break them into easy EMIs. We give the loan at the counter itself. It takes us 5 minutes. We have integrated with Government of India, UIDAI, Aadhaar to provide this loan facility. And that makes the entire school fees quite affordable. These are the few partners we work with. We work with Amazon, Kaya, AppTech, Byju's, Merit Nation, which allows us to sort of build an entire ecosystem. So that is what we do in terms of digital lending. We have our stall outside. I would request, for you guys to come and give the feedback. Do you think this product makes sense for your ecosystem? And we also have exciting offers and announcements around Amazon voucher. So you can drop in your name, phone number, and institution name. Few people have already done that, and we have Amazon vouchers up to 5,000, which we are just doing as a random poll and survey. There would be a 5-question survey given to you because it's a dialogue rather than a monologue for me presenting.